Welcome to Retirement Ramblings. I'm Scott, and today is day 257 in my countdown to retirement. So, as I do on every Saturday, I completed my weekly portfolio review. And for this week, I'm down 0.44% week over week, down 6.33% since the high in mid February. I'm also down 3.72% since January 1st of 2025. And my current allocation, when you consider, the reswizzling of everything based on the current market values, places me at 71% equities and 29% fixed income blended across my retirement portfolio. So that's actually a little lower in fixed income than I expected it to be, because I try to keep it rebalanced at 80-20 in my Roths and 70-30 in my traditional IRAs. So it's gotten out of balance, and I'm going to need to make adjustments, but I won't be doing that until the equity portion comes back up. Hopefully sooner rather than later, because I don't want to liquidate the positions and lock in any losses that I might have unnecessarily. And then, according to Schwab, the year-to-date return as of April 17th, 2025, on the S&P 500 is negative 10%. On the NASDAQ, it's negative 16%. On the Russell 2000, it's negative 16%. And on the Dow Jones Industrial Average, it's negative 8%. And the average member drawdown from the year-to-date high, which occurred again in mid-February, for the S&P, the average member is now down 23%. On the NASDAQ, it's now down 42% from the high. The Russell 2000 is down 36% from the high. And the Dow Jones is down 21% from the high. And then, according to Ritholtz Wealth Management, since 1950, whenever you have a 15% or greater drawdown in the S&P 500 during a month, the forward return after 1 year is 15%, after 3 years is 40.7%, after 5 years is 66.1%, and after 10 years is 185.9%. So my takeaway is that, you'll get a recovery, but it's not going to be a V-shaped recovery. And in fact, it could take, 1 to 2 years before you even get back to even, maybe longer, at those growth rates, if that holds true this time around. And then I was also just looking at, what are some of the things that have been performing really well in the market? And some commodities have actually been the big winners. And so, according to Bloomberg, the best return for the year thus far in commodities is gold is up 18.79%, and it had crossed $3,300 an ounce, a troy ounce. I think it was last week. And a lot of folks, including Goldman Sachs, have updated their targets to now have gold targeting more like 3,500 to 3,700, later in the year. The other things that are up big are soybean oil. That's up 15%. Tin up 9.77%. Copper 9.61%. Natural gas up 8.21%. Coffee 7.36%. And silver at 4.19%. So actually, I know a lot of people do stacking of either gold or silver. And in the silver regard this year, silver is actually slightly underperforming short-term treasuries, which you've been able to get anywhere up to 6-month treasuries, generally in the 4.3% range for most of this year. And then the worst performing commodities, the worst one is orange juice, which is down 46.13%. But there's no way you would know that based on the price of orange juice that you're paying for at the store. So that was amazing to me. Next one was cocoa, which is down 27.15%. And again, if you bought any kind of chocolate recently, you wouldn't expect that to be the case either. And then WTI crude's down 16.5 and Brent crude down 14.24. So I've seen both of those numbers, and that's translated into equities. If you own anything in the energy sector, you're down because of that. But then unleaded gas is, once it's been refined, is also down supposedly 13.42%. But again, at least where I live, you wouldn't know that because our gas costs are actually going up on a cost per gallon and not down, as you would expect from seeing the falling um, underlying commodity prices drop. And again, I'm assuming that most of that is due to the increased tariffs on Canadian crude that's being brought in. So, since it's not Brent and it's not WTI, and then you put at least a 10%, and I don't remember what the actual percentage is on Canadian crude, but it's at least 10%. And when you put that on, and then refiners like Marathon Petroleum and Valero, which use that, more than 60% of that comes from Canada, use that crude for refining and distribution in the U.S. That's why I think the prices are going up at the gas pump, at least where I live. And then the other thing that I just wanted to talk about for a second is kind of the political fallout, with regard to our neighbors to the north. And like, I really like Canadians. I like visiting Canada. Um, I've had really great relationships with folks there for a really long time. And one of the unfortunate issues that arise out of our current policies, uh, is that we're alienating them. And that has a direct impact on U.S. tourism, as Canadians are our biggest group of tourists, given their close proximity. Um, and Canadian, tourist destinations that are routinely visited by Canadians in the South, specifically, are really feeling the brunt of it with hotels and car rental agencies and destinations, um, and as well as things like restaurants, um, basically seeing huge drops in traffic as Canadians cancel trips that they had previously planned to come to the U.S. To enjoy. And so that's having an immediate impact, on the tourism industry, especially here in the South. And then it's also having an impact on real estate. So my sister and my nephew are both in the real estate industry in Florida, and uh, you know, Canadians are one of the largest groups of people that own real estate, especially in the South Florida market. Which is where the term snowbirds came from, because Canadians would go to Florida to escape their frigid winters and buy real estate and have their second homes there, and then spend money in the economy, whatever. Well, Canadians are now rapidly posting their condos and second homes for sale, um, because they don't like the way that they're being treated politically, and so they won't, and I don't blame them. And so um, my nephew, which he owns a brokerage, and my sister, who again is in the real estate industry, both of them are seeing immediate softening in the market, predicated on a large number of homes and condos that are coming on the market, which may or may not long term depress the pricing of real estate, at least in the South Florida market, as there's a whole group of people that are no longer going to be looking as buyers, and they're going to be, sellers, and really only time will tell whether that changes, and whether, as we work things out in North America with both our northern and southern neighbors, whether the way people feel about the United States softens over time, and returns to kind of the historical norms. I don't know, but anyway, that's my update for today. There won't be an update tomorrow, as I'll be focused on faith and family for Easter, and I wish all of you a blessed Easter, and I will catch up with another update on Monday. So if you have any questions or any comments, please leave them in the comment section down below or drop me an email at myretirementramblings@gmail.com. Otherwise, I hope you have a great evening. And again, tomorrow, have a blessed Easter and take care.